So, today we're going to look at three big stories in fintech. And on the surface, they look totally unrelated. But if you scratch just a little deeper, you'll see they are all pointing to this massive shift happening in the industry. It's a move away from, the flashy stuff and toward the boring but super important infrastructure that actually makes the money move. Let's jump in.
All right, so let's set the stage here. For the longest time, fintech was all about vibes. You know the deal. The slick app, the cool font, the hype cycle that sent valuations into the stratosphere. Well, that era, it's fading fast. Now, the real power, the thing that's actually creating lasting value, is the infrastructure. We're talking about the unsexy but essential plumbing, the deep workflow software, the stuff that gives companies real control over finance. And, as we're about to see, the ones who are winning are the ones who are mastering this hidden layer.
And we're going to see this exact theme, infrastructure over vibes, play out in three very different recent events. We've got a huge bank making a surprising purchase, a crypto company having a very quiet IPO, and a sneaky smart move by PayPal that tells us everything about where e-commerce is headed.
Okay, first up, Capital One. Now, you might be thinking, oh, great, another big bank buying some trendy fintech. What's the big deal? But this isn't just about Capital One slapping its logo on a new product. Nope. This is a huge strategic admission about where the real power in business finance actually is now. And spoiler, it's not where you think. And this really gets to the heart of it. By buying Brex, Capital One is basically holding its hands up and saying, you know what? Modern spend management software isn't just a feature, it's its own whole category. This stuff is complex, it's deeply integrated, and it takes years to get right. In a market that moves this fast, buying that expertise is just plain smarter than trying to build it from scratch. So what did Capital One really buy here? It wasn't just a corporate card company. They bought what you could call a spend operating system. See, Brex isn't just a card for startups anymore. It has become the central nervous system for a company's finances. It's the software where the CFO and the finance team live all day, setting budgets, approving expenses, controlling every dollar that goes out the door. That is the price. And here's why this is such a killer combo. You've got Capital One bringing its massive scale, its regulatory muscle, and its deep pockets for underwriting. And then you have Brex bringing this incredibly sophisticated software that controls the actual workflow of business spending. You put those two together, you're not just a bank anymore. You basically own the entire operating system for business finance. All right, let's switch gears. How is this infrastructure over vibes idea playing out in a world that is practically famous for vibes and hype? I'm talking about crypto. BitGo, a company that provides the essential plumbing for the crypto world, just went public, and what happened is a perfect signal of the market's new mood. So, the company priced its IPO at $18 a share. Now, in the crypto world, you'd be bracing for a wild ride, right? But what actually happened? Well, that's the real story. Just look at this chart. In crypto, you expect a chart that looks like a rocket ship or, a cliff dive. But this is flat. It's boring. And that's exactly what makes it so fascinating. In the old days, a chart like this would have been seen as a total flop. But today, it's a sign of something much, much more important. You see, this IPO wasn't about fireworks and getting on the news. It was a test. It was asking a simple question: can a crypto company go public without the market completely losing its mind? And the answer, from that very boring chart, was a loud and clear yes. It's a sign that maybe, just maybe, the crypto market is starting to grow up. And this quote just nails the new vibe perfectly. The market isn't euphoric. It's not just throwing money at anything with a .crypto at the end of its name anymore. It's sober curious. It's interested, it's willing to engage, but it's doing it carefully, cautiously. And honestly, that's probably a really healthy thing for the entire industry. So this is the shift in a nutshell. The old way was all about the memes, the hype, the get-rich-quick vibes. The new way, the way of companies like BitGo, is all about the boring stuff that actually matters. The plumbing, the security, the controls, and, actual revenue. This is the grown-up version of crypto, and it's the only version that's built to last. Okay, for our final story, we're looking at a move from PayPal that was so quiet you might have missed it, but it might just be the most important, boring move of them all. They've bought a company called Symbio, and while it didn't make a lot of headlines, it's a deep infrastructure play that's all about the future of how we buy things.
Just think about how you shop online right now. You're browsing, you find something you want, you click buy now. Easy. That's the world PayPal was built for, a world where a human being is making the decision to purchase. But that's all about to change.
Now, imagine a future where your smart fridge notices you're low on milk and just orders it, or your car schedules and pays for its own oil change without you lifting a finger. This is the world of automated or ambient commerce, and in that world, there is no buy now button for a human to click.
So how does PayPal stay relevant in a future without buy now buttons? Well, they bought the plumbing. Symbio is a master of what's called commerce orchestration. Think of it as the invisible network that connects all the merchants and marketplaces together so that a product can be bought from anywhere, your fridge, your car, you name it. By owning this network, PayPal is weaving its payment rails directly into the fabric of this new automated world.
Okay, so let's tie this all together. We've seen a bank buy a workflow system, we've seen a crypto company succeed by being stable, not splashy, and we've seen a payments giant quietly preparing for a future where bots do the shopping. What is the one thread connecting all of this?
It's all right here. Capital One buying Brex, that was about owning the workflow. BitGo's stable IPO, that proved there's a real market for the plumbing of crypto. And PayPal buying Symbio, that's about building the payment rails for tomorrow's commerce. In every single case, the boring but absolutely essential infrastructure won the day.
So what's the big takeaway from all this? In an industry, in a world that is obsessed with what's new and flashy, the real landscape-changing action is happening one layer deeper. The companies building the boring, essential infrastructure, they're the ones who are setting themselves up to win for the long haul. So the next time you hear about some splashy new feature, just ask yourself, yeah, but what's the plumbing look like? Because that's where the real power is.